Hey, Puppy Trades! I have good news. I think I have good news. I invented a machine that buys Bitcoin forever. You see, right now, I get about $800 a week in dividends, and I've been thinking about what I should do with those dividends. How should I reinvest them? And of course, in today's world, there's so many options. There's kind of too many options, even. It's easy to get analysis paralysis. Where should I invest my money? Where should I invest my dividends? And then I had a really interesting idea that was basically an asymmetric way that I could make a bullish bet on Bitcoin and I could profit from Bitcoin going to zero. So it's a really interesting concept. We're going to get into the math, the theoretical math in this video. So we have to understand a few things. The first thing we need to understand is when I was in college, Bitcoin had this insane rally in 2017, and my buddies were like, "Hey, puppy trades, we should start mining Bitcoin because in the dorms, electricity was fixed; it wasn't variable. So the electricity was a fixed cost. You paid for electricity, and like you either used all of the electricity or you used none of the electricity. You got the exact same bill." So he was going around to people who still lived in the dorms, and they were saying, "Hey, if you've got fixed electricity costs, mine Bitcoin." And we thought about it, and then Bitcoin crashed, right? And so we just gave up on it. We used all that free electricity to charge bird scooters. So I think in the evolution of everyone's life with Bitcoin, they have to have a time not just where they buy the bottom, but they have to have a time where they see Bitcoin top and they're like, Bitcoin topped. I'm glad I didn't buy it because every single time Bitcoin has topped in its history, it's made a new high, and we're going to talk about why. But basically, the idea is that we're going to go through a Bitcoin gold rush, just like gold went through a gold rush. And if we look at gold's gold rush, what we learn is that the people selling pickaxes and shovels were not actually the smart ones. The smart ones were the people who were just buying gold. So we're going through this Bitcoin gold rush. Everyone wants to mine Bitcoin. No one just wants to buy Bitcoin. And so we're going to get into the dynamics. I get about $800 a week in dividends, and we're going to talk about how I can use that to accumulate unlimited Bitcoin. Okay, so there's an ETF called WNTR. What WNTR does is it shorts strategy. It shorts MSTR and it sells uh, cash secured puts on WNTR. That's not exactly what it does. It sells an at the money call and then it buys an at the money put. That gets it a delta of negative 100. Against that negative 100 delta, they sell short term out of the money puts and then they buy out of the money calls to hedge in case MSTR goes to the moon. Anyway, MSTR has been in a bear market, which gives us a really interesting opportunity to look at the total returns of WNTR. And when you blindly average into WNTR since its inception, it's 105% total annualized return. So that's kind of the first basis point is that if WNTR is rallying hard, it's going to achieve 100% total annualized return. That means that it will pay for itself in a year. So if I go 50% WNTR and I go 50% Bitcoin, the idea is that 50% WNTR will come close to paying for itself after a year in a bear market, and Bitcoin will certainly pay for itself after a year during a bull market. So the idea is I'm getting $800 a week in dividends, and I can buy Bitcoin every week by also buying WNTR. So I can buy 50% WNTR, 50% Bitcoin ETF, and if Bitcoin falls, I keep averaging in to Bitcoin at a lower price, and the option premiums that I get from WNTR are going to soar. Eventually, Bitcoin can crash enough that WNTR will pay for itself in dividends and it will start working on my Bitcoin losses, or Bitcoin will rally tremendously. It will more than cancel out my losses from WNTR, and I've got an asymmetric bet on an asset that's essentially a monopoly. We'll get into that. But the trade is I'm getting about $800 a week in dividends. I can go 50% IBIT, 50% WNTR, and I can get unlimited Bitcoin exposure forever. So we're going to get into the math. The idea is if Bitcoin crashes to zero, WNTR keeps collecting massive premiums and reinvesting into Bitcoin at a lower price. Eventually, the bottom is bought and Bitcoin resumes to all-time highs. If Bitcoin theory holds true, then Bitcoin does not have a top denominated in fiat dollars. It can go to 1 million, 1 billion, and even 1 trillion one day. The math. Since Bitcoin has no fiat top under Bitcoin theory, it can 10x from 100,000 and go to 1 million. All the money from WNTR can be lost completely, and the return on IBIT and HODL, those are Bitcoin ETFs, is still massive. It's the perfect asymmetric bet on an asset that can add infinite zeros to it. So the idea is I'm accumulating IBIT and I'm accumulating HODL, HODL, during this bear market against WNTR. As the bear market continues, the WNTR premiums go up, and I'm reinvesting into 50% IBIT, 50% WNTR, and I'm buying more Bitcoin as Bitcoin goes lower using what eventually becomes house money from WNTR. So I start with a 50% IBIT and 50% WNTR. In reality, I have a lot more stock exposure than that. I'm getting dividends from across the market, and this is what I'm going to focus on. WNTR generates 90% annualized yield through shorting MSTR and options income. IBIT tracks Bitcoin directly. All dividends are automatically reinvested into the 50-50 pair. The system continuously accumulates Bitcoin while staying hedged against downturns. After the core engine stabilizes, I can eventually shift to gold and I can shift to silver mining ETFs. So what I could do 25% winter, 25% IBIT, 25% OUNZ, that's deliverable gold, and 20% SLJY, that's a silver miners out of the money covered call ETF. And this way, I'm not just getting digital gold, I'm getting physical gold and physical silver in my portfolio, and I'm accumulating this forever. And then WNTR is the hedge against super deflation. We'll talk about why super deflation is highly unlikely, why the money has to go somewhere. So all dividends can feed back into the core winter IBIT pair, enhancing compounding. The system thrives in both bull and bear markets. WNTR provides downside hedging and income. IBIT captures long-term Bitcoin exposure. Reinvested dividends create exponential growth. Adding gold and silver ETFs diversifies risk. The infinite Bitcoin machine turns volatility into compounding wealth. So scenario one, Bitcoin reaches $1 trillion per coin. Let's assume your dollar cost averaging buys a steady fraction of a coin over time. Average Bitcoin purchase price, let's be generous and say your average buy purchase over 15 years is 200,000. So this is saying this is in a low scenario. Bitcoin's going to double in 15 years, and that's very much on the low end, since the price will rise over time. See, this is assuming the price is going to rise over time, because it will. Total Bitcoin accumulated, I could accumulate 1.56 Bitcoin, and my value in 2040 at $1 trillion a coin is $1.56 trillion. So eventually I've invested 312K total. I end up with 1.56 trillion. My gain is roughly 500,000 fold. So I'm able to do this because I'm using WNTR to hedge, so I can accumulate as much Bitcoin as I want. Even if you're off by 99.99%, you're still astronomically ahead. The scale is so massive that small differences in entry price barely matter. So it doesn't even matter when I buy. So my scale is massive. What makes money valuable? In the United States, neither paper currency nor deposits have value as commodities. Intrinsically, a dollar bill is just a piece of paper. Deposits merely book entries. So, what controls the monetary expansion? It says such expansion cannot continue beyond the point where the amount of reserves that all banks have is just sufficient to satisfy legal requirements under our fractional reserve system. So the legal requirements of our fractional reserve system is what sets the basis for monetary expansion. For example, if reserves of 20% were required, deposits could expand until they were 5 times as large as reserves. Reserves of $10 million could support deposits of $50 million. So even when the required reserves ratio is 10%, or even when the required reserves ratio is 20%, you can still expand $10 million into $50 million. The lower the percentage requirement, the greater the deposit expansion. Read that again. The lower the percentage requirement, the greater the deposit expansion that can be supported by each additional dollar. Thus, the legal reserves ratio together with the dollar amount of bank reserves are the factors that set the upper limit to monetary creation. So the legal reserve limit ratio is currently 0%. It was lowered to 0% during the pandemic, so that means that our monetary supply can expand indefinitely. People don't realize this. This is why we have so much inflation. This is why we have gold and silver exploding out of super cycle lows. This is why the stock market is always making all-time highs, because the required reserves ratio was lowered to 0%. So there is no faucet, there is no upper control on monetary expansion. Should this continue, Bitcoin can eventually reach $1 million, $1 billion, $1 trillion in the long term. So what this machine does is it's essentially buying $400 of Bitcoin every week. It's hedging $400 of WNTR every week, and Bitcoin eventually is going to explode from 100,000 to 200,000. At that point, all the WNTR losses are accounted for. Then every dollar beyond 200,000 is house money. If Bitcoin goes to $1 million, the WNTR losses are cut at 200,000, and I get $800,000 per Bitcoin in pure profit for the rest of my life.